As we get that great photo taken, I'd like to call our next speaker to the stage, Oliver Kirkham, Senior Valuation Analyst at Veson Nautical, on shipping cycles, the effect of an aging fleet, and the era of efficiency.
Good afternoon, everyone. My name's Oliver Kirkham. Welcome to my presentation. So I'm Senior Valuation Analyst at the Vessels Value team at Veson Nautical. And recently I've been investigating the effects of the green transition on the shipping markets, looking for evidence of how this is shaping the industry. So that's the idea of this presentation, is to use data from Veson Nautical to illustrate the dynamic between new efficiency measures and the aging fleet, and how this could potentially shape the supply of future shipping cycles. So the idea is to give a concise top-level view of contemporary issues facing fleet development. So at Veson Nautical, we are a maritime software company, and our goal is to be the standard platform that propels maritime commerce. There's two ways that we do this. The first is AI-integrated voyage and freight management software, which is the IMOS platform. And the second is the maritime and freight data solutions, products such as Vessels Value, ShipFix, Q88, Milbros, and OceanBolt. So as I mentioned, I work on the Vessels Value team. So we're primarily involved in running an automated valuation system that provides daily valuations for all the major ship types on an individual level. And that's the data that we're going to look at in this presentation. So our history of dry bulk valuations, time charter rates, fleet development, average speeds, etc. Focusing on the dry bulk fleet throughout. So looking back over the past 25 years, looking at Capesize fleet growth versus time charter rates, going back to the year 2000, obviously the main event here is the 2008 super cycle, which really kind of dwarfs anything else that's happened in this past 25 years. This was kicked off after China entered into the World Trade Organization in 2001, and subsequent huge increase in demand for dry bulk commodity imports into China. And this was combined with the fact that investment into new building had actually been fairly slow in the late 90s and early 2000s. So we had this incredibly profitable imbalance between supply and demand, which ended up with time charter rates hitting an all-time high of $193,000 per day in Q2 2008. But the part of this chart that I'm really going to focus on in this presentation is the dark blue area, which is the new build ordering. Obviously, huge amounts of vessels ordered in one particular time, huge amounts of deliveries of dry bulk vessels leading up to 2015. And really, the other important thing here, if you look at the previous 15 years, it's relatively low levels of new build ordering in the past few years compared to what we've seen earlier in the decade. So this is creating an important dynamic in the fleet. There's an imbalance in terms of the age profile. So that's what we're looking at here, breaking it down into 5-year age groups over time. So interesting to note that 2025, 45% of the current dry bulk fleet is between the ages of 10 and 15 years old. And because of the fact that there's been consistently lower levels of new build ordering compared to earlier in the decade, this actually means that there's going to be a 22% decline in the availability of deadweight under 15 years old, looking out to 2028. And 2025 is really the turning point for this. This is particularly important for the sale and purchase market because, of course, 5 to 15-year-old vessels are the most liquid age group of vessels. It's where you see the most amount of vessels being sold. So as we can see, there's a decreasing amount of candidates for sale over the next 3 years. The other factor I've highlighted here is because of the EEDI regulation, by 2028, all the vessels under 15 years old will be next generation high efficiency vessels. So there's a real stratification of the market over the next 3 years. So what is the problem with a large portion of vessels, 45% of the fleet, aging over 15 years old? Well, that's what I'm going to look at in the next few slides. So looking at fuel efficiency, average speed, obviously the two things are closely related. And one of the interesting trends here is you can quite clearly see the dark blue line, 0 to 5-year-old vessels have seen a noticeable improvement in speed performance over the past 10 years relative to other vessels. And this is presumably because of the Energy Efficiency Design Index. So this was really the first IMO regulation that addressed improving efficiency and reducing CO2 emissions. A 10% improvement required every 5 years since 2015 in terms of the CO2 emissions per deadweight carrying capacity. And we can see the effect of this in average speed. There's quite clearly an improvement in speed performance. These newer vessels are obviously using less fuel at higher speed and being operated more profitably. On the other hand, if you look at the 10 to 15-year-old vessel, the orange line, these, obviously, as we mentioned, the largest portion of vessels at the moment. This is the age group that's seen a consistent decline in average speed. So there's factors such as CII and EEXI regulations that potentially have caused a reduction in speed to improve fuel efficiency. And looking further ahead, of course, we have the IMO greenhouse gas intensity limits, which is now actually going to issue financial penalties for inefficient vessels using high carbon fuels. And it's really this particular generation of vessels that were never built to any efficient design criteria in the first place that are going to be affected by these regulations. So looking at that from a slightly different angle, if we look at the average amount of cargo transported by Capesizes on an individual level in a year, another interesting trend, we can see the 15 to 20-year-old age group has actually seen a noticeable decrease in productivity over the past 4 years, 20% less cargo in total carried on average on 15 to 20-year-old vessels. So typically we see as vessels age towards 18 years old, they're completing less journeys each year, operating at slower speeds and operating on longer, less profitable routes. On the other hand, the vessels under 15 years old are the ones that are favoured for very productive routes, such as Australia to China. So there's evidence to suggest there, as 45% of the fleet ages to the 15 to 20-year-old age group, potentially there'll be a reduction in productivity. So the other thing I'm going to mention here is in regards to aging vessels is the maintenance and regulatory aspect. So the first thing to mention is 15 years old is, of course, the third special survey and dry dock. So there's certainly going to be an increase in off-hire periods over the next 5 years as more vessels are heading into dry dock. There's already been reports of increased waiting times to get into dry dock because of increased demand. And the other thing that I've highlighted here is the issue of port state control. So different countries have different approaches to port state control. Looking at that here, we can see there's a much higher portion of vessels over 20 years old visiting ports in Russia, Guinea, and on domestic Chinese routes. So comparing that to some port state control statistics from annual reports, we can see that Guinea has a very low incidence of port state control, no vessels detained in that year, only 11 deficiencies in the entire year of inspections. Compared to Australia, which is very well known as a particularly strict area for port state control, much higher incidence of deficiencies, 3.6% of those vessels were detained. So the point here is that there's obviously certain routes which are going to be more favourable for older vessels to operate on, and potentially we're going to see those routes becoming oversupplied as we head towards 2030, where, as I say, there's a large portion of vessels aging to this age group. So where's this heading? Of course, it's heading to the scrapyards. So again, looking at the fleet age profile, interesting to note here that this is the biggest generation of vessels there's ever been in one particular age group, and presumably they're all going to have to be scrapped at the same time. So there's going to be, at some point, a very high rate of removals from the fleet over the next 10 years. You've got places, well, India, for example, is investing a lot of money into increasing their scrapyard capacity. They're also offering an incentive to scrap your vessel in India, 40% discount of the value of the demolition value of the ship, 40% discount for a new build vessel in India. So interesting to note that scrapping levels have actually been very low over the past 2 years, which is obviously exacerbating the effects of the aging fleet. If we compare the value of a 20-year-old Capesize to its value in scrap, you can see 2024, this grey line, huge increase in asset values. So the vessels are worth a lot more on the second-hand market, and that's obviously a deterrent factor for scrapping. Of course, the earnings factor is important here as well. So this chart was made using our Vessels Value Time Series product. which is a new product where you can access all of the data series and time series that we have and instantly make these graphs and combine them together. So in this case, we're looking at 1-year time charter rates in the green versus asset values and new building prices. So really the interesting thing here is since this kind of mini cycle in 2021, time charter rates have actually decreased from this peak, whilst asset values and new build prices have steadily increased. So there's a real divergence happening between the two, whereas we can see there was a much stronger correlation in the past. So my opinion here in terms of increasing asset values, last year was a very active year, a lot of Chinese buyers buying up older tonnage, and increasing new build costs is a factor here as well. Obviously it's very expensive to order a new vessel at the moment, and that's driving more demand for second-hand vessels. Added to the fact that we mentioned there's a decreasing pool of 5 to 15-year-old vessels, which is typically a very liquid sector. So there's a supply-demand function there that's pushing up values for assets, ship assets. So where are we in terms of the shipping cycle from the supply side at the moment? Well, it's quite clear that we're still in the long-term recovery phase from the 2008 super cycle, and it's really the last phase of recovery where this huge generation of vessels will have to be scrapped. And it's potentially going to be earlier than 10 years because of the fact that these older vessels are now going to be financially penalized for using cheaper fuel and because of the fact that they're not built to be efficient. As well as that, we've seen evidence to suggest that there is decreased productivity as vessels age and an increase in off-hire periods over the next 5 years due to increased demands for dry dock. So there's three things there that are really supporting the fundamentals of the supply side of the equation in the dry bulk sector. So we're already seeing that modern vessels are getting better charter rates. They're more preferable for longer-term charters. A lot of the big commodity traders and public chartering companies favor them for ESG compliance. So the question is, as the fleet is rebalanced towards modern vessels, is this going to increase earnings enough to catalyze another surge of new build ordering? So just to finish, obviously the demand factor is an important thing to mention here, so I'm just going to cover that very briefly. Obviously there's a lot of uncertainty at the moment, things like trade barriers, and somewhat of a backlash against the sort of China-centric version of globalization that we've seen so far in the 21st century. And of course, a lot of disruptive measures as well. Personally, I think the reduction of capacity of the Panama Canal last year was a very important moment. It's really one of the tangible effects of climate change that we're seeing. So there's certainly more disruptive measures in the future that are going to support time charter rates. As well as that, of course, increasing average haul from increasing routes to Guinea and Brazil from China. In terms of global growth, most estimates are below average. IMF, for example, is projecting below average amounts of GDP growth. So certainly nothing like the optimism that we saw in the early 2000s in regards to China's economic growth. But I think it's interesting to note that, as we saw in the first slide, the dry bulk fleet was to some extent caught off guard by the magnitude of demand increase in the mid-2000s. So that is the end of the presentation. Thank you very much for listening. I hope you found it interesting, hope you found it informative, and we'll be at the cocktail party afterwards, so if you do have any questions, please feel free to come and approach us. There's 4 of us here from Veson Nautical, and of course we'd be delighted to discuss any of the information that I've discussed in this presentation. Thank you.